Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 1st of June, 2021. I hope you all had a great Memorial Day. I most certainly did. Had a lot of people over for the first time during the pandemic. It was like normal. I mean, a lot of people. Everybody was vaccinated. It was fun. And throughout the city, we saw that people were doing that. I'm sure it was similar in your areas. They're even in some of the stores now where my wife works. She's at a large jeweler. As of this week, if you're vaccinated, you don't have to wear your mask any longer. So you're seeing the changes to normalcy come back across the aisles everywhere that you're looking. Very, very important, and it's a good thing, obviously. So let's applaud that. Very important. We're also seeing in other parts of the world maybe a peak in India's cases. Brazil surprised everybody with really strong growth, even in the heart of their pandemic power, and Europe doing much better. So we look at the markets, and I'll tell you my many years of experience, decades, 5 decades now that I've been a registered broker. Going through long holidays, especially the Memorial Day holiday, it's one of those that I always think we're going to get pretty wild action on, and we did today. You surged in the stock market overnight, and you gave it all up by the day when some of the supply management reports came out, and they're showing that we're out of materials, and that's not a surprise. So the supply chain is hurting manufacturing. I get it. And that's not going to just change because of material, it's workers. You both have absenteeism and you've got people that don't want to work. And they're going to stay that way until when? Until this government program ends where they don't get $300 extra a week to stay home and not work. At that point, in the fall, people are going back. And they'll do it probably before then if they want the jobs that they had. They might be looking for new ones. But there'll be an element of people that want to work from home. They're not going to give that up. And we'll see how that all works. I'm looking in my own industry to see what is going on. You know, people love working at home. Will they be required to go back to the office? Right now, with our regulations, it looks like they will be, but you don't know until the government tells you. On the S&P, on a closing basis, you're down almost 1/4 point for the week. Okay, but we also haven't gone up through those May highs. That, to me, is very important. You came up, you made a run for them, you didn't get through them, and you backed off. And as you can see, today was pretty violent. You got as high as 42.30, and then you finished the day at 41.98. So the market fell back 30-some-odd points, an outside day down. That's very important. If you take out the high of an outside day down, I have a rule that if that's done, the market travels to the closest Bollinger Band, the closest, or a moving average over the market, the one above the market. When you take a look at the action, the swing line is up, higher lows, higher highs. The 18-day average is back here at 41.64 roughly. If you take out this high, probably going to make a run for the May high. That'd be my guess if you do that. And remember, we'll know in the next 48 hours if that rule works. And where's the Bollinger Band? Right up over it. So that is the reason that I'm looking at this. Do I think the pros might have buy stops there to get there for 15 points? They might. They might. But if you pull back and you get under this break low to get to the 18-day average, you also, at that point, create a different pattern. You'd have a higher high and a lower low. You're out of the uptrend at that point. When we take a look at momentum, you're overbought as can be. So even if you get over that, you've got to prove that you can get through that band and stay there. If it gets over it, I think it's a blip. In other words, where I think it makes its run at that number, and that would be it. I'm very concerned if you're long about being this overbought. The market has not yet even tried to get both numbers staying over 80. In the NASDAQ, similar story. Overbought, higher lows, higher highs. Nope. Today's break low got under this previous one. So without today, you had the higher lows, higher highs. The market, you come in, you get this burst of action, not unusual, first trading day of a new month. People out of the market 3 days, they think they've got whatever they do. The market opens sharply higher, and then boom, bang, caught. Carnage. Again, take out this high, then I think the Bollinger Band. Now, if you look at May, these highs are still in place. You haven't taken them out. I'm only mentioning it because so many people get infatuated with the sell may go away theory because of a normal summer and people lose interest in the market. I don't know that that's the case anymore, but I always pay attention. You know, things that have a legacy to them, you watch. In the Dow, you have an outside day up. If you take out the lows of today's low was 34,408. If that's taken out, I think you're going to drop right back to the 34,249 level and try to hold that. The trend is still going to be up at that point unless you step through right here. And if you step through this low of 34,170, then you have a different whole game. Right now, still bullish, but again, didn't take out the May high. The markets that still moving up, and this one's different. The Russell has been a powerhouse here. It has not taken out the May high either. It's right in that area, so I'm watching to see what happens. Did we have an outside day? We did. So I'd be looking today at markets that closed up, taking out this low, and markets that close down, not to take out today's high. Very important in all the stock indices. In the VIX, I had this morning told my traders in my paid subscriptions that I think that they could be writing puts if you got down there. Didn't happen, unfortunately. Got close, but close doesn't win you anything. And I thought you would go back here. We'll see if I'm right or wrong. Same game here, by the way. First off, are you embedding? Both numbers are under 20. Both were under 20 on Friday and Thursday, so you've got your embedded reading. So that embedded reading, two things. It means the pros are likely selling this market up to that 18-day average unless that red line closes over 21. Otherwise, I think they're holding on to their shorts. In the T-bond market, you fell back from approaching the upper band to the 18-day average, trying to figure out what to do next. You know this is jobs data week. Everybody's going to talk about it. That 266,000 number that we got last month is going to be so in line. Is it going to be a revised number? Is the number this week going to have a 6 in front of it? Some people think so. Could the number surprise you and get only a 2 or a 3 in front of it? That would be really pushing the Fed back from raising rates of any type. It's an important report, a big one. So pay attention. If you're going to position yourself, understand going into Friday that you've got to deal with that report. That's going to be a big, big report. In the 10-year notes, I've moved to the Septembers, by the way, from the Junes in these. You're just drifting sideways. Is this a base or a top? This week will probably give us the answer. In the dollar index, all we did is last Friday, you rallied up. This is Thursday's action. Friday, you hit the 18-day average. Had I done a weekend report, I'd have said, I think that's about it. And you can see how you fell back. And that's what you've been doing ever since. In the euro, it's the flip-flop of the dollar. You're overbought. You're trying to come up here. It's not acting all that good. It's not acting bullish or bearish. We need better chart picture. British pound, slipping back, unable to hit the Bollinger Band again, and momentum is very overbought. Probably not the place for a lot of currency traders right now. Bitcoin, still bearish, but very oversold. Hard to get traction when you're that oversold. In the energy markets, it does not appear that Iran is going to do any deal of any type till after their election with another new hardliner. They're not letting the watchdogs from the UN do very much either. So they're playing their hand, if you will. And that also means you're not going to get their oil on the market. I pray we don't get their oil. I'm against these governments that are this hard line and out of step with the world. So why give them the money to operate? And we'll see what happens. But OPEC met today. They're going to keep production pretty much as it was through into July now. And that's a bit bullish, the market, because the market's looking at what we talked about, all these economies picking up and big demand, and you went up and made a new high on that news. Well, to be expected, but how do you know what to expect out of an OPEC meeting? So most people stand back. You wait and you see. The news on Iran is brand new, so that's important. I wrote about it in my reports this week, too, already. You can see where you're hitting the upper bands. You're not a buyer at upper Bollinger Bollinger Bands, so I just tell traders to walk away. But the key is that each morning at 5:40 in the morning, I'm recording, and by just after 6 p.m., I'm typically posting to the website. I send out an email and a text, and text in the United States, not a text outside of the United States. But within the US, I send out a text message along with an email and a push notification in our charting software of all this. Traders often ask, do I do longer term trade analysis? Absolutely. I cover the weekly charts with a separate video, all just for the weekend, all weekend charts. Week-long charts. Then I cover the day and sometimes the week with it on the Monday through Fridays. I cover all these markets and I give buy here, sell there, I'm wrong, I'm right, do this, do that. That's how you play the game. You're paying me to tell you what I'm seeing in the market. The idea there is you come to the table with your own ideas. I'll throw out mine. You bounce them off. Does that make sense to you? Before the markets really get up and running in the morning. So you get this reasonable time. I think 6:20 in the morning is about when I have them out now. You have a great day. Go to our website under the word research. You find out about everything there, and that's where you can sign up. Take care.